Hey, I am excited to present today. This is Unlocking Your Dream Home, a comprehensive guide for first-time home buyers. And I'm super excited because joining me today are my guests, my co-hosts, and partners in real estate, boutique property management, Orange County, and really Southern California uh, agents, Bridget and Tani. Welcome.
Good
Hello.
morning.
Good morning.
All right, well, let's get right into it. Let's see, let me get my presentation here. This is just an overview of first-time home buyer. We're going to cover quite a bit today, and really, it's just going to reinforce some like overall knowledge, and then hopefully, if you're watching this live or if you're watching one of the recordings after the fact, you have some questions. DM us, shoot us. I'll have our contact information at the very end. Shoot us a text message, give us a call, and really. There's a second layer to this, and that's a one-on-one consultation, whether in person or on Zoom. It's our opportunity to, dive in further about your specific situation. But this will be a great overall for almost all of you first-time home buyers. So I'll take it away. This is our team. This is our team. Boutique property management as a realtor and myself as your lender. Really, the first phase of home buying is with your realtor. Identifying your goals. What is your motivation to buy? Right now, it's probably because rent's increased, but what's your ideal price range and home? What is your desired move-in date? If you're on a lease and it's ending soon, you probably have a more specific date versus some people just say, hey, before summer starts, when we can move when the kids get out of school. What are your must-haves? Do you have something specific, like you must have a garage, you must have a bedroom on the first floor, you need a backyard because of animals? What are those the must-haves versus the I can live without on my first home. And then what area are you looking for? What neighborhood are you looking for? The planning and preparation part of it, you're discussing with your realtor team, your objectives, and they'll sit down with you one-on-one and go over a process. They'll go over the purchase contract ahead of time, so you're not seeing it the first time when you're actually writing your offer, submitting your offer. So you'll know contingency dates. You'll know the differences of inspections and how it kind of relates to your specific needs. And then knowing the market, the agents, that you're going to have representing you from boutique property management, like that, they are very knowledgeable in Southern California market. They know what's going on in those little micro cities. Because quite frankly, if you go from South Orange County to North Orange County, or you pop over to Riverside, the markets are different. The competitiveness in offers are different. Property taxes are different. All sorts of things. And so, looking at the macro level and the micro level, they have that knowledge, and then they can go over supply and demand. Quite frankly, it's not going to change anytime soon. Everyone kind of knows the demand is increasing as rates go down, and supply, well, there just isn't that much of it. And fortunately, having experts in real estate like these gals, they know contracts, they know the timelines, and they're able to help you with that. Phase one, as the lender, really it breaks down to two things: ability to repay and credit worthiness. So how does an investor, how do we decide, like, you have the ability to repay? That's income and assets. And credit worthiness is your credit score and your credit report. There are many different loan products out there that we have access to, not just one, which is fantastic. Being a mortgage broker means I'm not tied to just one FHA product, one conventional product. We have over a dozen different products, different investors we can take it too. So we have FHA, which is known as the lower down payment, lower credit score. There's conventional, which generally is people that are closer to 20% down because that's where you want to have that mortgage insurance. USDA is your land, raw land, agricultural type of land. VA is for our military veterans, which is kind of known for the up to 100%, financing. Non-QM, that covers a gamut, and that's like your bank statement, self-employed, profit and loss, a lot of different, investment properties, DSCR loans, and then down payment assistance. There's all kinds of down payment assistance in the forms of second mortgages, of grants. We have down payment assistance that helps you with not only the down payment but also covers closing costs. So, if you're in that bucket, reach out, let us know, and we can talk about what specific programs there are that might work. Some of them have credit and income restrictions. And then what to begin gathering, to help us be expeditious. We'll talk about the difference between self-employed and being W-2, but have your photo ID ready. If you're getting gift money, I can get you a gift letter, certificate of eligibilities for your veterans, award letter if you have Social Security or pension, and then the twos. The twos is what I call it. It's 2 months of bank statements, 2 pay stubs, the last 2 years W-2s. If you're self-employed, it's most likely the 2 most recent filed tax returns. There's a caveat to that. If you've been in business more than 5 years, we can use one with Freddie Mac. So that is phase 1 in a nutshell. Phase 2 with your realtor. It's searching and finding the home, so it's browsing online the listings that Bridget and Tani and Susanna are sending you, and kind of like from your kitchen counter, being able to like identify which areas and price ranges you like, narrow it down so that you as a buyer aren't driving all over looking at tons of different areas. Now that we have the internet and such great tools, it does make searching for a home a lot easier. The ladies will send you notifications of new listings that come on the market. Off-market properties are always something that people are hoping to hear about. I say start local and fan out. If you're looking to be in a specific area because of work or school or family lives nearby, start there and then fan out as as price or properties requirements dictate where you want to move to. And then open houses with your realtor. Some showings, some properties have restrictions on when you can see homes. Some listing agents just do, hey, no private showings, just come to the open house because we're going to get inundated. And maybe the seller has works night shift or has a newborn and can't accommodate, so they just say, hey, come to the open house. So going with your realtor, because what I've seen over the years, almost 2 decades in the industry, is buyers are going through open house and they're looking at they're looking at the view and the upgrades and whatever, and your realtor with you, they're looking at the stuff that you're not. They're looking at stuff that might be remodeled and not permitted. They're looking at staining in the flooring or ceiling that might be water damage. We're looking. It's 4 sets of eyes now looking when you're with your realtor. Now, if you're going because it's convenient, pop in really quickly. A good little trick I have for you is, before you start going out, just keep in your glove box business cards of Bridget or Tani, and this way, when you walk into the open house, you just hand that agent that's hosting the open house Tani's and Bridget's business card, and this way they know not to harass you and demand that you sign it in and call, text, email you. They already know that you're represented very well, and who to reach out to get some follow-up feedback. And then offers and negotiations. Knowing the purchase contract before, like we talked about, having them review it with you, so you're not seeing it the first time when you're actually signing the offer. Um, there's a multiple offer market right now because of inventory being low. So before you decide, I don't want to offer over list price, we have a tool, really cool tool. We plug in the list price, we plug in the market value price, we plug in what you're paying above that, and it will actually show you in months how long it will take for you to catch up to that, recoup that, so to speak. So, let's say you're going to pay 50K over the list price and you're like, man, I'm overpaying. Well, once you see that in 7.2 months, uh, based on appreciation, you've recouped that, you've reached that in value, it makes it a lot easier to be competitive and put a bid in over list price. Presenting your offer, boy, I've seen it time and time again. When an average agent just emails an offer and doesn't even call the listing agent and say, what is your seller looking for? How many offers do you have? Is there, like, do you need a rent back? Do you need a quick close? Like communication up front. Luckily, these ladies, they know that, and they're reaching out and having those conversations before you're even putting your offer in. They know what's important to the seller and to the listing agent. They're presenting a completed competitive offer. I can't tell you how many times I've seen purchase contracts where they haven't even adjusted any of the contingency dates. It's all the standard, boilerplate contract, and that's not competitive. That's not what would be expected in this kind of market nowadays. So, presenting the offer in the most favorable to actually win. And then negotiating, trying to get the best terms. It's mutual. The reality is, this is if there's an adage, an old saying, if there's only one winner, no one won. The reality is, it's a give and take. And then, knowing where you'll draw the line, and what's the most you're willing to pay before you move on. Phase two with the lender. Upfront cost is always a question, and budgeting. So earnest money deposit. Typically, earnest money deposit is 1% to 3%. I would say it's 3%. The only time I really see 1% is usually with VA loans, or you're getting down payment assistance to cover the the down payment. But 1% to 3% of the purchase price. Once your offer gets accepted, that is getting wired into escrow. The appraisal is an upfront cost. Once your offer is accepted, one of the first things I do is order the appraisal, so we have that valuation. It takes, on the short end, maybe 5 days. On the long end, it can take, 7 to 12 days if we're not getting a rush, or if they're very busy. So getting that right away, it might cost somewhere between $500 to $700. Kind of depends on the size of the home. And I cannot order it until you sign the initial disclosures. So when we initially register the loan, you get your disclosures. Don't sit on them. Definitely get through those and sign those. That way I can order the appraisal. And then home inspections, your agents will order that. There's some great vendors that they have home inspectors, and that kind of depends. On average, somewhere between $500 and up to $1,000 if you're adding on. If you have a pool and maybe there's a ADU, or it's a larger home, you're getting or you're getting mold testing, or lead testing, some other things. But that's paid to the inspector at the time of the inspection. Those are the upfront costs. And the other thing I'll say about upfront costs too is when we're budgeting for, everyone thinks down payment is let's say 3.5% down, and that's what I need to buy a home. The reality is you're going to have closing costs. So before you start looking at homes, it's important to sit down with your realtor and your lender to figure out what home are you looking for, because up front, your closing costs that you're going to have, are going to be your first year home insurance policy. You're going to have prorated property taxes, escrow, title. So when you're buying a home, it's not just that down payment. Generally speaking, they say, it might be an additional, 2% or of the purchase price. Okay, moving along. Being competitive, when you complete your loan application, you'll upload those documents, the twos that we were talking about. I'll submit that to the underwriter, and then the underwriter will review those and give us an approved with conditions. Now, when I say being competitive, is we actually have an ability to get a verified approval letter. So you've probably heard a pre-qualification letter. You've probably heard about a pre-approval letter. Well, this is actually different than that. It is called a verified approval letter. And it's verified because before you've gotten your offer accepted, I'm able to send it to an underwriter who is reviewing your assets, who is reviewing and confirming your income and your credit. Why is this important? Well, your documents aren't verified with a pre-approval, with desktop underwriting. All that's verified against is the information that's put into the system. So good information in, good pre-approval out. Bad information in, well, guess what? Might have a bad pre-approval. And that's how you hear these horror stories about loans not getting approved and loans falling apart. That can be prevented, and you can sleep well at night during your escrow period if you get underwritten ahead of time. So if you're looking to buy a home, reach out to your real estate team, reach out to me to have that verified, we call it VOW process. And that's just an example of it. It will actually say you have been verified up to this loan amount, and it is way more detailed than just your standard pre-qualification letter. Another reason why it's important. 32 National Association of Realtors says that 32% of the offers are cash. So you're going up against people that have no loan contingency, no appraisal contingency, can close very quickly. And that is actually up from the previous month where it was 31%. So you're going to see more and more people coming into the market that happen to have some cash in a shoebox. The verified approval letter, great thing about it is, we can rush even an appraisal and get that done within 5 to 7 days. We can get clear to close, which means we're ready to fund the loan. Somewhere between 14 to 15 days. If it's really clean W-2, we could probably push that down to 10 days. And a cash buyer, well, they can close somewhere between 4 and 10 days. They still might have an inspection. They still have to look at seller disclosures and title report and some things. So, somewhere between 10 days, if we can get close to that, we're competing against a cash buyer. What's great about the verified approval letter is your assets like cash are already verified. So is your income. So a fantastic tool going into this market. Now, let's see what's next. Ooh, the do's and don'ts. When you get your pre-approval letter, let us know before you're submitting an offer, because I can actually toggle the numbers and stuff and give you an idea of what your payment might be, what the interest rate might be for the day. So certainly let me know. Shoot me a text. It's not a problem. I don't work bankers' hours. Bridget, Tani, and I, we work 7 days a week. Let's say maybe 18 hours a day. We got to sleep at some point. And even they were just in Turks and Caicos, and they were texting me and they were texting clients. I didn't even know they were on vacation. That is the type of professionalism these ladies have. So communicate. Any changes in employment immediately. Hopefully that doesn't happen. Now, the don'ts: do not open any new lines of credit, make any large purchases, Don't move any money unless you've talked to me first. Don't deplete your assets we're using for your down payment, and don't quit your job. Moving money makes it a problem because where the money's moved to, I then have to source it, and it just requires 2 more bank statements, 2 months of bank statements. So, and then don't make any large purchases. We've had some horror stories, not mine, thank goodness, but someone gets their offer accepted, they go to buy a home, and they're super excited, and they go out, you know, a week before closing, and they're buying a new furniture set, they're buying new bed, all this stuff, and they're opening new lines of credit, and to make those purchases. Well, the lender has the ability to run your credit in 11th hour just before funding to make sure that your credit score is still the same. And guess what? There's horror stories out there where somebody no longer qualified because they changed. They were just buying some furniture. So wait till you're closing, get those keys from Tani, and then run over to buy your new couch. Borrower communication. We have a really cool app that helps. You can communicate with me. You can communicate with your realtor. It'll push out tasks to do. You can upload those documents right to the app because it is the 21st century. So when you get your offer accepted, the time we celebrate, especially in the competitive market, what is your realtor team going to do? Well, they're going to schedule those home inspections. They're going to negotiate repairs and credits. They're going to make sure that we are on top of the contract contingency periods, and they're going to review the seller disclosures with you. So I'll get into all of those in just a minute. As a lender, I'm going to order the appraisal. I'm going to make sure if there's any credits that we're letting the investor know. We're getting the documentation so those credits count towards your down payment. I'm clearing underwriter conditions. So any kind of updated bank statements or pay stubs or insurance binder, sourcing of funds, gift letter, etc. I'm clearing those conditions with my processor and with you, the borrower. And then the difference between locking and floating. Right now, we're in a trending time now. We're in March of 2024. If you're watching this much later down the road, and right now the rates are trending down. So on a day-to-day basis, I may lock the rate if we're closing in a day or two, but the tendency is to float the rate because week over week rates are improving a little bit. And then rates versus points and buy downs. The bottom line is what you may not realize is you do control the rate, and you control the rate based on the points. So if the lender's telling you a specific rate, reach out because I can show you plus or minus what rates plural you can qualify for. Okay, so the paperwork, inspections, scheduling your home inspections and termite. A wood pest inspection, a termite inspection is different, it's separate. And there's a reason for that. Seller may pay for the termite inspection report, but work with your realtors on whether or not you want to put that in the contract. Because if you put it in the contract, then the lender is going to require seeing that clearance, and that could pose a problem. So scheduling your home inspections, there's all types. There's a general inspection, which looks at your electrical, plumbing, heating and air, the appliances, foundation, the roof, making sure the outlets work, the windows function properly. If it's got a pool, the pool equipment works. If the trussels and posts and stuff in the attic are in good condition, all sorts of stuff like that. It's very important to do a home inspection. If you're in a single family home, I would definitely have the conversation with the gals about having a sewer camera inspection as well, because I've had horror stories where they close and then all of a sudden there's big beautiful trees in the front yard that have been there for decades, wrapping their lovely little roots around the sewer lateral line. breaking it into a million pieces, and it always would happen that as soon as you close escrow, a week later, you're going to flush that toilet, and that'll be the time when that toilet backs up because your sewer lateral is just disintegrated or blocked by big roots intrusion. So please, please, please do your sewer camera inspection. Okay. Um, if the repair's done, we'll talk about if there's issues that come up in the repairs, what can we do? They'll review the seller disclosures. There's state disclosures, there's local disclosures. The seller has to fill out some disclosures. There's a natural hazard disclosure that's required by federal law. And then there's the preliminary title report that from the title company, HOA documents. If you're in an HOA, you'll get the minutes, the budget. You want to make sure that the property management and HOA are fiscally responsible and sound. And then, hey, last but not least, the agent's there to schedule that final walkthrough inspection to make sure that the property is still in the same condition that you wrote the offer on. That is phase 3 of the realtor. Next step is the inspections. So when you're doing your home inspection, you can get a concession. You can ask the seller to fix the issue prior to your final walkthrough. If it's competitive and the seller's not going to give you a concession, or fix it themselves because maybe they don't live in the area or you're closing very quickly. At least knowing going further, if the home inspector says there might be a plumbing issue, hey, you know what? Do a secondary inspection, reach out, have a plumber come out to do a further inspection. I use the analogy of the home inspection is kind of like going to your primary care physician. They take your blood pressure, their pulse, you hop on the scale. I don't like to do that one. Maybe they do blood work, and all of a sudden something comes up. Your blood pressure is too high. There's something in your blood work, and they send you for further inspections. That's what the home inspection is. Maybe they say, you know what, you need to have a roofing company come out and do further inspection to get a quote to see replacing some shingles or maybe eventually replacing the roof, what that might cost. If you do your inspection within the contingency period, you have the ability to cancel. In some states, they have option period. If you're doing that within your option period, you can cancel and get your money back. And like in Texas, for example, they just keep your option money. And termite inspection, it is required on a VA loan, not required on anything else. So if you put it in the purchase contract, Section 1 clearance will be required by the lender. But the appraisal, the common way to appraise a property is the sale comparison approach. That's kind of what we know of. And that is, they just look at other properties in the area that are comparable to yours, aka the subject property. They look at things of value to like bedrooms, bathrooms, size of the lot, permitted square footage. It's a big one. So if you're looking at homes and your realtor's got that keen eye and they see something that's this is probably a remodel, an addition, something like that, it's important to look into, is this permitted or not? It will have an impact potentially on the appraisal, because they're only going to appraise a permitted portion of the home. Any updates if it's at view, location, and then overall market trends and the condition of the home. That's what an appraiser looks at. No questions so far. Okay, I'm gonna keep going. The appraisal issues. So what if the appraisal comes in low? What can you do? Well, if you have not removed that condition, that contingency up front, you can renegotiate the sale price with the seller and your agent. Number 2, you can increase your down payment based on the amount that it was short. You can reach out to me and we can see if we can't restructure the loan. Or if you do the appraisal within your appraisal contingency period, you can cancel the contract. This is a little reminder: appraisers can flag conditions of the property that are significant based on the value that need repair. That's a good example of a home with some roof shingles missing. Title insurance, very important. Title companies, before they insure a property, will do a search of the property's history to confirm the ownership, to make sure that there's no one out there that's going to claim ownership of the property once you now acquired it. They're going to see if there's any liens on the property, and that's anything from tax liens, IRS liens, uh, HOA liens, property tax liens, and make sure that we know what liens there are, and those get cleared, paid off at closing. And the property taxes, make sure that they're paid. Title insurance is just, there's two kinds. There's the lender's title policy, which is required if you're not paying cash, and there's the owner title policy. It's optional, but boy, I'd want to be have that peace of mind that title's clear if I'm ever trying to sell it. Some states do require a survey to be done to make sure you know what boundary lines there are, and they're going to make sure that the deed, the transfer of ownership, is recorded. Phase three, of course, there's mounds of paperwork. I can remember when I got into the business, it was actually mounds of paperwork that we would fax. Now it's DocuSign. Thank goodness. The mounds of paperwork are now just, I don't know if it's gigabytes, megabytes. In the end, it's probably terabytes. But closing process, earnest money deposit and the down payment. You will reach out and contact your insurance company. But there's been a lot of insurance companies that have left, for the state of California, left Florida, for example. Like, getting homeowner insurance is a hurdle in itself. So what I would recommend is, when you're out and you're starting to look and narrow down homes, and you've narrowed it down to 2 or 3 homes, actually let the insurability of that property be one of the factors of deciding which property to put an offer on. Because you want to make sure that, one, you can get insurance, and two, that it's not crazy expensive. So make sure you reach out. If you need a recommendation for an insurance company, hit up your realtor team. They have some great recommendations. I review rate and terms with you. That we do that twice. In the very beginning, there's a form called a loan estimate, and it is called estimate because it is a good faith, but it is subject to changing, and that's why 3 days before you close, before you sign your loan documents, we have what's called the closing disclosure. And the closing disclosure is where those numbers will be dialed in, and that's what you'll be expected to bring cash to close. And loan estimate is just going to have an estimated escrow and title fees, maybe prorated property taxes. I throw in, maybe $350 a month for homeowner insurance. If there's points that are paying for the rate, mobile notary, recording a grant deed, all sorts of little things. But those will be disclosed on the loan estimate within a few days of registering your loan, and the closing disclosure must go out 3 days before. It's kind of like your 3-day right of rescission for the loan. And then we'll go over escrow impounds versus waiving. Some lenders will require it based on the loan. Some people would rather budget and have those homeowner insurance and property taxes paid monthly, so they don't get that bill for thousands of dollars, twice a year. Or in Texas, it comes at the end of the year. All of a sudden, you get that bill, and you're like, I need to come up with that much money. So sometimes it's best to have it impounded and paid monthly. We're rounding the corner. There it is, your realtor team. So with that, let me bring back, oops, there we go. Bring back my gals, Bridget and Tani. I'll make sure that you guys share
Hi.
your contact information. And the last slide, there's my contact information. If you're watching this, you could scan that little QR code and that'll get you to download the app. And that's us. So
Okay, thank you,
thanks
Larry.
for watching. I managed. I feel like I could probably be an announcer at a horse. Around the corner is the final inspection. Here we go, and the buyer's winning. They got a home. So, is there anything else that we need to share with the people that are watching, or just
Well, I
wrap
want
up
to
with?
add how wonderful you are and how you take a lot of time and effort to talk with the clients and get to know them. And that's why we're comfortable with sending our clients to you, because you do your due diligence and you make sure that the properties close escrow, which is important.
Yeah, you definitely dot your I's and cross your T's. There's a few things that you added in there that I didn't even think of as even as a property manager, and how long Tani and I've done it. You definitely opened my eyes to a few different things that I didn't pay attention to. So thank you. But no, you can definitely tell that you're very detail oriented, and that's why we're blessed that we get to work with you.
Yes.
I'm blessed I get to work with you because you are you're easygoing. You know, you're very honest, and it just I feel comfortable, and I know your clients feel comfortable because you're just gonna be matter of fact. Like you're not that salesmanship that is trying to get that commission. Like you're gonna tell somebody, hey, this is the wrong home for you. And
No, we want them to come back. We want to have
referral business. Yeah, we want referral business. Absolutely. So yeah,
we're not a one-time shop.
No.
Right? We're here for the long haul.
Absolutely.
Well, with that, thanks for watching. And again, if you have any questions, here you go. I'll throw our contact information down there. Bam, there's our phone numbers. You can call or text any of us. And that's it. That's a wrap.
Thank you, Mary. Thank you for doing this on a Saturday. Thank you. We'll talk soon.